Disruption comes in all shapes and sizes, from workers unionizing against oppressive management to countrymen protesting against corrupt government. Unfair practices can cause uproar if not addressed in an efficient and sufficient way. In the software industry, massive changes are happening due to the productivity boom that AI promises. This boom promises to shake up the software industry as investors are on the lookout for new winners while scaling off potential laggards. One of the major areas shaken up is the creativity space, led by the industry giant Adobe. Adobe has been dominating the space for decades, becoming the industry standard that every creative professional uses. As they were essentially the only player in the market, they used this advantage to price their products as they saw fit. Governments, schools, media companies, and anyone who needed to create digital media had to use and purchase the industry standard Adobe. As this practice continued, customers clamored for fairer priced products, creating a weak point where new competition could enter. Companies like Figma, Canva, and Autodesk took advantage of this and are offering products that are aligned with the majority of customers. This has led to their stock underperforming and essentially staying within the lower end of its price range for the last 5 years. So, can Adobe sustain its competitive advantage despite intensifying competition? Let's find out. Before anything else, to those who are new here and would like to support this type of content, please like, comment, and subscribe so I can create better content for all investors out there. Adobe has numerous advantages in the creativity space. First mover advantage, brand recall, pricing power, data, the list could go on. And fun fact guys, they even created the PDF. These extensive advantages, or as some would call moat, would not be sustainable if not for their main competitive advantages, and these are their ecosystem and network effects. Due to having first mover advantage for more than 3 decades, not joking here guys, more than 3 decades, they were able to dig their moat freely and created all of these advantages through time, becoming the go-to creativity software for customers. This means that Adobe was and is the industry standard for creative work. To increase this lead, in 2003, they bundled their flagship product, Photoshop, with their other key products, such as Premiere Pro and After Effects. This was called the Creative Suite and became their first iteration of their ecosystem of products. This ecosystem transformed to the Creative Cloud in 2011 and started their transformation into a full cloud software company. This change skyrocketed revenue and growth for the company as they charge monthly to yearly subscriptions to access their products, which includes continuous updates. This was a massive change as their new model reduced the overall cost that their customers pay over time. As of today, their most expensive product for individuals cost $840 per year versus their previous model, CS6 in 2013, which had an upfront cost of $2,600 and cost over time for updates of $500 or more. This means that each subscriber can now pay 70% less than before to have access to Adobe's ecosystem when comparing prices now versus more than a decade ago. This innovation made Adobe an accessible tool for emerging and professional creatives. This shows how the company became the industry standard and how they have maintained their moat since their formation. Despite creating access for more customers, their increases in subscription cost, lack of free creative and collaborative products has soured Adobe's perception for some of their customers. This is why new competitors offer free products to garner usage and potentially convert or add customers into their own ecosystems. Based on their usage, they are taking advantage of this sentiment, take portions of the industry that Adobe is too slow to get. Even if their products are not exactly like Adobe, capturing untapped portions of the creative industry was their way of pulling customers to their sales funnel. They offer products that the giant has not developed or give them for free to prove that there are now better options for their customers' needs. As Adobe is not as agile due to being a giant, investor sentiment followed suit as they assumed that the company is now in an innovator's dilemma. The innovator's dilemma is a paradox where successful companies fail as they miss out on disruptive innovations that change their industry. Blockbuster, cable TV, phone companies like Nokia and BlackBerry are examples of companies that face this and fail to evolve with the times. Now, this begs the question, are investors correct that Adobe is facing an innovator's dilemma? To set the stage, we first need to answer, what does it take for a company to even innovate? In my opinion, there are three main characteristics that a company needs. 1. Aligned top management. 2. Talented employees. And of course, 3. Cash. And lots of it. I could create a whole other video on these three things, but in short, I do think that they have the first two characteristics. As for the third characteristic, I had to validate if this is something that they can sustain in the long run. To figure this out, I looked at the annual recurring revenue that Adobe had when competitors started to appear. Here is a chart of Adobe's yearly revenues and the times their nearest competitors, Figma, Canva, and Autodesk, were launched. As you can see, despite Canva appearing just a year after Adobe launched their subscription model, their revenue continues to grow at a solid clip. That is a compounded annual growth rate of 14.92% for more than a decade. Additionally, even if the giant does not publish their subscriber count, it should be noted that they did not do a lot of price increases for their yearly plans historically. An example of this is their 20GB photography plan, as they kept their yearly price consistent at $119.88, but increased the monthly cost from $9.99 to $14.99 only after 11 years. This means that their revenue growth comes from the adoption of their products rather than blatant price increases. We can also see that Adobe does try to maintain their prices if the business can sustain it. This proves that Adobe's customer base has been sticky and price increases have not been a real factor in their past and present revenue growth. But how about their future revenues and customers? Does track record really mean anything if their customers become price sensitive? I was concerned about this as well, and what eased my mind is seeing how ingrained they are in the creative industry. I found this out by speaking with and listening to industry professionals on Adobe's ecosystem. In general, while they do see some uses for other applications, the overwhelming majority still use their ecosystem due to the mastery they have of Adobe. This is important as this learning curve creates the stickiness of Adobe's products for high usage customers. As more creative professionals use Adobe, their creativity flourishes as they master the company's products. Similar to an athlete that flourishes in their craft, creative professionals keep Adobe in their arsenal for use cases that might require their products. This solidifies that Adobe is the industry standard people involved in creating digital media expect or require their partners to use their applications. This creates sustainable network effects in their ecosystem and proves that Adobe does have all three characteristics to innovate. So now, are they innovating and do they have the capacity to maintain their lead? For the first part of the question, this is an easy yes as seen through their business model innovations. They also have Adobe Sensei and especially their new product, Adobe Firefly, that prove that they are involved in the AI space. Adobe Sensei, launched in 2016, allows to automate small nagging tasks such as generating tags for assets. As for Adobe Firefly, this was launched in 2023, focuses on generative AI models, which empowers users to easily create images based on their needs while being safe for commercial use. This makes Adobe's AI model the most appealing for creative professionals as they have the assurance that their creations are within industry standards. The 4.5 billion generations made by customers since the launch of Adobe Firefly proves this. All these factors give me confidence that the company can keep up with technological trends while keeping their competitive advantage intact. As for the capacity to maintain their lead, I have done a relative analysis to compare their numbers to the nearest publicly traded competitors and other cloud businesses. For the closest peers, I compare them to Autodesk and Figma only, as Canva is not yet publicly traded. The purpose of this comparison is to see who has the capability of maintaining their position in the industry and be a long-term threat to Adobe. As for the second comparison, I will be using the top cloud businesses in the industry and compare their operating efficiencies. Aside from my usual metrics, I will be replacing adjusted price to earnings ratio or adjusted price to free cash flow ratio for both comparisons. I'll also be using adjusted free cash flow volume for the first comparison and adding share buyback yield for the second. For my first comparison, you can see that Autodesk is already operating profitably while Figma still has a long way to go. Autodesk shows that there is a possibility to become a profitable business while staying within your own niche in the space. As for Figma, they currently are swamped with stock-based compensation, which I see as a real expense. Pairing this with their negative operating margin, this may mean that the company still has to work on solidifying their position in the creative industry. On the other hand, Adobe is the cheapest stock among close peers despite the sheer size advantage of their free cash flow volume at almost 10 times higher than peers while having the most efficient operations. This shows how their moat is well protected despite the promises of AI disrupting the industry. Now, for my second comparison, I focused on comparing Adobe to peers who also dominate in their niche. As you can see, Adobe is still in a different league. Their moat is so wide that they are able to maintain their efficiency while giving back to shareholders the most. Their lead allowed them to create such an efficient business model that even other niche cloud services cannot come close. Despite these, they are also the most unloved stock in the group, even if they seem to benefit the most from this AI tailwind. All these numbers show that Adobe can maintain their lead. Their solid position in their niche and the wide cash basin they have give me confidence that they can retain their leadership as long as they continue to innovate into the correct technologies. Additionally, their methodology of keeping up with technological trends while staying within industry standard adds to my confidence as it shows that top management understands the position that they are in. After my DCF analysis, I would say that the company is already within its discounted price levels, but I have not purchased the company just yet. As the path to new technologies is usually unclear and is full of caution, I'm looking for a heavier discount to fair value as their continued success hinges on maintaining their continuous innovation in their industry. As for my steps moving forward, I will keep this company on my watch list and purchase the company at a better price, assuming that their moat stays intact. And my analysis, I would like to quote the author of The Innovator's Dilemma, Clayton M. Christensen. To succeed consistently, good managers need to be skilled, not just in choosing, training, and motivating the right people for the job, but in choosing, building, and preparing the right organization for the job as well. Thank you so much for listening to my analysis. For those who are curious about my portfolio updates and changes, please don't forget to like, comment, and subscribe. I will be doing this for future videos as well. Thank you so much.